Morning everyone, it's Ian from Avocado Property. I've just thrown it on Dave Howarth that we're actually going to do this video live. He's popped into the office to give us a Wednesday update on the mortgage world, and we thought, why not do it live?
Yeah, why not, Ian? You get worse every time, thank you.
Anything could happen on live TV. We could be invaded, anything could happen. So we're just going to kind of go with it. And what we're going to cover in this video, we're going to talk about what's kind of happened since stamp duty holiday kicked in and how the mortgage world is finding it, how the property world is finding it. We're going to cover if you've been on furlough, whether that's for, let's say, 3 weeks or 3 months, or you're still on furlough, what the banks and the lenders are actually thinking about lending people, where the complications are. Is there certain lenders that are or are not looking to lend to people on furlough? We're going to cover 10% because obviously we've done a lot of coverage on the 10% issues at the moment as well. So we're going to cover that and what's available. We're going to talk about first-time landlords. So there might be people out there at the moment that have got 100 grand, 50 grand sat in their bank account and it's making them very, very little amounts of interest at the moment. So we'll talk about what is covered at the moment, what is the availability for a first-time landlord if you were looking to invest in a buy-to-let. And then we'll have a bit of fun and we'll talk about expectations for the rest of the year.
Always have a bit of fun at the end.
Who knows? Who knows what's going to happen? So if we get straight into it, Dave, first, thanks for coming.
No problem. Good to see you.
AFP Mortgages, AFP Wokingham, I should say. Dave Howarth and his team. Great guys. A lot of clients of ours have had some real successful conversations with you, and thanks for doing these updates. So, how have you found it since stamp duty kicked in?
Oh, you see this grey hair, Ian? My God, honestly.
Same.
Absolutely, it's rubbing off. It's been crazy busy, ridiculously busy. To be honest, once the estate agents started trading back in June, it was busier than expected. But as soon as that stamp duty holiday was announced, it has just gone off the scale. We have had 2 busiest ever months, literally record months. And so far we've beat our busiest month and we're on the 19th this month. So it is, I hate the word, unprecedented, but it really, really is at the moment. So busy, so much activity in the market. It's great. It is great.
Yeah, I think probably if I talk to a lot of estate agents, I talk to a lot of brokers, solicitors, everyone is crazy at the moment, which that buzz, that kind of excitement around the market. And even today, before we popped down, it was 9 o'clock and I was talking to 2 people that were looking to sell smaller properties to buy bigger properties to save on the stamp duty. So it's created a momentum. With mortgages, have you found that the banks or certain banks have reacted to that positively? Are they still cautious?
To be honest, the banks are still very cautious at the higher loan to values. So anything above 85%, very high interest rates there. We're seeing rates creep up a little bit, to be honest, but that probably is a volume driven thing, certainly for the lower loan to values. Now that is literally because, like we just said, so busy. The banks are finding it difficult to process these mortgages within their suitable timeframes. And Nationwide, for example, yesterday put pretty much all of their rates up by 0.5%.
Wow.
Big increase there. And that is simply because they are taking about a month now to get from application to offer. They like it done in 10 days, they're up to a month, their staff can't cope. So they're trying to slow that flow down by increasing rates so people go elsewhere, give them a time to catch up. But all the banks seem to be doing the same, so it is just having a knock-on effect. Don't get me wrong, there's still some amazing rates there, but there is that
they're trying to balance the pendulum as such.
Exactly.
Which makes sense, supply and demand element of things is always, in any good business, evident to be played with, I guess.
The good thing there is I think they'll come back. This is a temporary measure, they'll get on top of it, rates will come back down. And even if you secure a rate now, which is relatively high, nothing's saying that we can't swap you to a better rate later down the process. Absolutely.
So maybe then if you are fixing into application stage, you found a property, you're going to application stage, look at products that maybe don't have huge penalties for cancellation, where maybe you could do 12 months with that product and then actually swap it over.
Or trackers. There are some trackers out there with no early repayment penalties. And the tracker rates are pretty much the same as the fixed rates at the moment. Some are slightly higher. But again, if it's a short-term thought process for you, you want to do something else in 6 months' time to get yourself onto a better rate. Or even, application to when you get the keys to the house to completion. What do you talk, 3 months probably? Within that time, you may see rates decrease. So secure the rate that's available now, maybe slightly higher than you like, but fingers crossed they're going to come back down within that 3 months.
Okay.
I haven't got a crystal ball, so we can't promise that, but if they do,
You're live on camera, you just said it.
There's no promises, guys.
And if anyone that's watching at the moment's got questions for us, I can just about see the screen of the camera, so fire them over, we're happy to answer them as we go, and thanks for everyone that's watching at the moment. So that's a good general overview then. So generally speaking, there's a buzz. I think people can feel that. They
Really
can see
busy.
it.
Yeah, really busy.
In terms of people that have been on furlough, let's say someone's just been on furlough for 3 weeks, and it was, I don't know, it was maybe in July, and now they're back, they're active working. Is that going to have an impact with them if they're looking to buy?
Not necessarily. So if they're back to work now and they have got their normal job back, no chance of being furloughed again, no chance of reduced hours in the future, that should be fine.
Okay.
More so if we can give the lender a pay slip showing your standard salary back on your pay statement. That's great.
Yeah.
If you've got one pay slip showing you're back on 100%, no furlough pay, no problem whatsoever, as long as that's going to carry on moving forwards.
Okay.
If you've still got an element of furlough on your pay slip, it does change things a little. We might need something from your employer to say you have been taken back on and your salary is X and there is no chance of reduced hours or more furlough. But it's fine. As long as you're going back to work and we can get that confirmed by the boss, that should be fine. Okay.
So people that have been on furloughs from the beginning that are still on furlough, will they review that differently, or? Yeah, potentially, because now we're so far through. Furlough's due to end, and again, I may be wrong, but I think it's October. So they're thinking now, well, if the businesses haven't got back to where they need to be, surely they must know what they're going to be doing with their staff by now. So there are more concerns if you've been furloughed for a long time and not back in work yet, that you may be facing redundancy. I hate to say it, but there are concerns with the banks around that. So again, if you produce a furlough pay slip, lenders can still use it, providing your employer can back it up with a letter saying, yes, you are due to return to work on such a date, your salary will be this much at that point, we can still use that. And don't get me wrong, there's a couple of banks out there, Halifax in particular, that will still just use whatever is shown on that pay slip. So if you present a pay slip showing furlough, 80% of your salary, they'll use it. If you show a pay slip furlough plus 20% topping you up, they'll use it. That's good. But very limited choice to do that. We've got a question here from Mike, who's talking about surveyors, because we had a backlog of surveyors, and we're seeing people that are now saying when they're calling they haven't got an appointment until the end of September or the middle of September. Is there particular lenders that you're finding that are doing mortgage valuations quickly at the moment? Or we're probably seeing about 10 days, 2 weeks at the moment for the survey to be carried out. So it's nowhere near as much of a backlog as it was. But still not as quick as it was in the good old days. We would get a survey done sometimes the next day, certainly within 2 or 3 days. But we did some mortgages yesterday, where I think it's probably the 27th, where the surveys are booked in. It does depend on the area and the surveyor's capacity in those areas, but it's not months, I wouldn't have said, but we're talking 10 days, a couple of weeks as standard. And that's okay. It's not too bad. We used to like to get a mortgage offer out in 10 days. Nowadays, that's just not going to happen. So, but still, a couple of weeks is acceptable. I've got Anne-Marie, just before we go on to 10% deposits and first-time buyers, just before we go on to landlords, someone's actually mentioned about landlords and said, are you seeing a lot of landlords selling? I know you've got quite a big landlord portfolio. I can probably answer that question from our perspective as well, but are you seeing a lot of landlords releasing their properties at the moment? Not so much. No. Not at the moment, no. Don't get me wrong, the whole buy-to-let market has dramatically changed over the last few years. I think if they were going to sell, they probably would have done so before now. Tax implications have changed. Certainly the stamp duty doesn't come into it when you already own, but those that were going to probably have done it. I don't think this situation has really triggered anyone doing that. I had a couple of people with HMOs, so houses with multiple occupancy. They're finding it difficult. They have vacant rooms and untenanted properties which they're moaning about a bit, and they don't obviously want to try and shift. But getting rid of them isn't that easy. It's exactly what I was going to say. I've not found landlords with let's say their pension plan, for example, that are looking to have the tenant pay the mortgage off and then look to retire. But Anne-Marie, on your question, I think I find exactly the same as Dave. People that have got HMOs that are looking for room lets, where that end of the market is probably, they're a big proportion of the 9 million people that are still apparently in furlough. They're the people that would potentially take those room lets, and I've seen a lot of HMO landlords where they've actually got 50% occupancy and things like that at the moment. So it's busy for actual tenant registration at the moment, people looking. So if you are a landlord, why would you sell that asset when you can fill it and have it paid? But I think the HMOs definitely are the areas where people
they're suffering, aren't they?
Yeah. And on the landlord front, so if there's someone, let's say, that's a first-time investor and they're not making a huge money, there's a lot of products for those available at the moment, those first-time sort of landlords?
Yeah, the buy-to-let market's good at the moment. Obviously, you can only go up to 75% loan to value. Yeah. So I think the lenders feel a bit more comfortable with you having your 25% deposit in there. It's those high-end loan to values that are causing the problems. So the buy-to-let market's actually pretty good. Still some really keen interest rates if you've got the larger deposits, 40% plus. Okay. You've got to think first-time buyer, first-time landlord, always very, very difficult to place. There's a very limited market out there, and I'd say almost probably not worth considering buying your first ever property as an investment. If you've got a property already, if you're a homeowner and you want to get on the investment ladder, absolutely great, Stamp duty's reduced, great interest rates, if you've got the deposit, and great time to do it.
I think if someone is looking to buy an investment and they're looking at it as a long-term plan, say 6, 10 plus years, then why wouldn't you do it now? Save the money on the stamp duty, fix in for maybe a 5-year cheap fixed deal if that's an option. And then you know where you stand for the next kind of 5 years. Obviously, if you do have to sell it, you've got that penalty, but don't plan for that. Plan for what you want to do and stick to it. If maybe you're looking to buy a property now and then let it out for 12 months and try and make money on it, who knows what the market's going to do after the 1st of April when things change. We just don't know the answer to that. Because I guess no one was really expecting, we saw the buzz after the agents got released, but no one was expecting the stamp duty holiday. And it was kind of, no one's expecting whatever comes next because we just don't know.
An indication of that is we're seeing so many mortgages being ported. We did a few ports, it's the same as a normal purchase for all intents and purpose. But normally people think about when they're going to move home and they'll say, okay, my mortgage is coming to an end, I'll sort of tie it up with that sort of timing. Now, everybody's porting because all of a sudden they want to move, the mortgage is still in its fixed period, so they're just moving that to the new house. Something we're fine to help with, but there's more of it than ever before at the moment.
It's a good point actually, because I'm finding with people we've agreed sales with that are looking to port, and maybe they did a 5-year fixed or a 3-year fixed and they're only a period of time into it, there's a huge penalty if they come out of it, so they are porting. But actually getting hold of the lender and actually talking to the lender is really, really difficult.
Probably 3 weeks, a month before you can even talk to the lender. Maybe another couple of weeks before you get an application, a day to talk about the application. It's crazy.
We
had a guy straight away.
Well, that's what I was going to mention. We had a guy with a particular lender, and it was like 5.5 weeks.
Unbelievable.
And even one that we ended up talking to about as well. That's actually exchanged now, but he was struggling with HSBC. I think it was about a month away from even having a meeting with them. So it's good to have a conversation with a mortgage advisor like Dave and his team, because I know I'm plugging it now on live, but it is really, really important. If you're looking to buy or looking to sell, talk to these guys. They know what's going on. They've got their fingers on the pulse. Dave the other day was on the phone to HSBC and like 7:30 in the morning in a queue.
It's a common practice now.
These guys know what's going on, so talk to them. And let's put ourselves on the spot. What do we think is going to happen for the rest of the year?
Oh, what do we think? Well, certainly I think until October, there's still going to be a big buzz going on. October is when the furlough is due to stop. I think this stamp duty holiday is going to keep things going probably till January. If you haven't got your house by January and the stamp duty holiday ends in March, are you going to complete in time? Things might taper off then. The rest of this year, I think we're going to be busy. There is concern surrounding what happens with redundancies after October, which could slow the market a little bit. If I'm really honest, I've just seen so much volume. I would be surprised if things do taper off that much. Touching wood as we speak, but
indeed,
I think it's going to be quite busy. Long may it continue.
And we are registering a lot of buyers now that have been furloughed previously. They're now back to work. They're now looking to be active. And it wasn't like the stamp duty holiday happened and then the next day it all went bananas. It has been in increments of just gaining traction. I saw on a property investors group I'm on Facebook this morning, and someone yesterday had put, will property prices crash? And then the mix of 108 comments on there where no one's got a clue what's going to happen. Someone, crash, recession, someone, no, boom, and no one knows, do they?
No one knows.
I think from my perspective, what we're seeing, there is a buzz. I think the 9 million people that are still on furlough, there's a very good chance that they're people that weren't looking to buy anyway. There might be part to do with the restaurants and the gyms and things where people haven't pulled everyone back, cinemas and bowling alleys and those type of employees that potentially are not first-time buyers now. But we've definitely seen a huge buzz of people selling between 250 and 350. There's been a pent-up amount of demand that's come into the market. There's a lot of stock available at that sort of level, and typically they're all looking to spend 455, 556. So I think me and Mike spoke about it before on camera, but we're seeing a split in the market where we've literally got high volume and still high demand at that kind of sub 400 category, and then the 5 to 7, shall we say, there's quite a limited amount of stock available, and it's a big jump for people, so they're being choosy with it, but you just see it come on, it goes, it goes.
Everything's being snapped up.
The
only thing we will say is those 10% deposit mortgages, the reason the lenders aren't offering those, it's a mixed bag. Some say it's volume, they can't cope with the extra work, but there's a lot saying it's a risk thing. And there was, probably back in May, a paper release saying they're expecting property values as a nation to reduce by maybe 13-14% in the next 12 months. So the lenders aren't sticking their neck on the line offering 10% deposit mortgages. If the house prices are going to drop that much, there'll be a negative equity.
Yeah, makes sense.
I think that is a national picture. I mean, again, touching wood, the south here in the Reading area may be slightly in a bubble and protected from that. If we do see a shift in prices, I'd hope to think it's not that much. But certainly it's not affecting the volume of mortgages we're getting. So if things are going to change, it might be very small with that thought in mind by the end of the year, but I think we'll be okay.
And I think we've probably seen with the government that they're very much ready and prepared to act on things quite swiftly. I think they wouldn't be silly enough to think, right, on the 1st of April, Help to Buy for second-time purchasers drops, stamp duty holiday drops. I mean, I don't want to be a solicitor, a mortgage advisor or an estate agent, which I am and you are, in March, because that's going to be crazy.
That would be horrific, wouldn't it? It's
going to be a month of just carnage for transactions. But on the 1st of April, I don't think it can just go stop. So there's got to be some sort of phased extension, I would imagine. We don't know because no one knows what's going on, but I would imagine that's probably what we're looking at.
And I think if we do see some slowdown because maybe there is a wave of redundancies at the end of the year, the government will have to do something to keep the momentum. Whether that will be extend the stamp duty holiday or make some other changes, I don't know. But like you say, they're not just going to pull the plug on everything and let us suffer, are they?
No, it would be crazy. With all of the good work they put in to get things going, to then just, like you say, just pull the rug, it would just be...
I can't imagine.
It's like having the world's best crash diet and then you just go back to, eating donuts straight afterwards. It's just not going to happen. No. Everyone that's watched, thanks so much for some of the comments, some of the questions. As we work as agents, we're not just painting a pretty picture. We want to give people that honest feedback. And that was the prep that me and Dave, conversation we had before we went live, to say, look, let's talk openly and honestly about everything. We don't know what's going to happen the 1st of April. We do know there's a great buzz in the property market at the moment. We do know loads of people are looking to upsize, port mortgages. There's options available. If you are sat there with money in the bank and you're not making money on it, why not invest in property? Because over a long time picture, it will make you money. It will be a good pension setup. If you're a first time buyer, you need advice. Come to us, come to Dave, come to his team, talk to him. You guys are doing stuff for shared ownership for us at the moment, Help to Buy. These guys know everything that's going on. Multiple landlords, £1 million properties. These guys know what's going on. They're the place to go. And if you're looking to sell or you're looking to buy a property, you can obviously contact us. And I think we'll try and make this live, as I hope it's gone out there. I mean, from the comments and the views, it looks like it has. But we'll try and make this live video a regular thing. So if you do have questions for us, and maybe in a couple of weeks' time we run it again, we'll put an event in and just check in with us, ask us a question. And yeah, anything else that we want to wrap up on?
For me, that's good. Thank you. We got through it.
We got through it. Nothing happened. No one came in. We're happy with that. I'll turn it off. And if you've got questions further, then yeah, just give us a shout. You can get in contact with both of us via Facebook, Instagram, or our website. Happy with any.
Absolutely. I'd love to help out anybody who's got any questions, just anything that's going through their mind. Do get in touch with Ian, get in touch with myself. Always here.
When we finish the live video, I will tag in Dave's contact details into the comments. So pop back later on. Obviously, it'll be there for the rest of the day. Have a good rest of the Wednesday. Stay out of the rain.
Thank you.
Cheers.